Hey guys, this September, gold is going absolutely crazy. On September 1st, it broke through $3,550. On the 2nd, $3,600. On the 8th, $3,650. And on the 9th, it smashed past $3,700, setting a new all-time high. No pullbacks, no breathing room like for knockout punches, one after another, leaving everyone who's short sitting on the sidelines, or even lightly invested, totally stunned. How did gold suddenly become this unstoppable? Is it just retail investors pumping it? Or is big money driving the rally? More importantly, with the Fed likely cutting rates in September, U.S. stocks started climbing on the 9th, with all three major indexes hitting record closes. Can this year's rate cut break the September curse for U.S. stocks? If it does, will that affect gold's momentum? Hey everyone, I'm Luna, here to help you turn macro trends into real portfolio gains. Today, we're not only breaking down the core reasons behind gold's surge, but also connecting the dots between rate cuts, U.S. stocks, treasuries, and gold. What's really going on? On one side, gold is soaring. On the other, U.S. stocks are showing undercurrents of volatility. What should ordinary investors do? Beyond all the noise around gold's epic rally, what other safe haven assets are 90% of people overlooking that can help you protect your returns in these turbulent times? Smash that like button, hit the bell, subscribe first, and then watch make it a habit to profit from your investments. First, let's tackle one question. Why has September been so wild? Why did gold break all-time highs and reach $3,700 beyond the U.S. budget deadline, seasonal demand increases, and global geopolitical tensions? The key trigger that made this year's story go crazy starts with a jobs report. So bad, it made people doubt the statistics software. On the evening of September 5th, the U.S. Labor Department announced only 22,000 new jobs were added in August, compared to an expectation of 175,000, a huge miss. Even worse, the previous 2 months' numbers were revised down significantly, cutting 21,000 jobs in total, completely shattering the strong U.S. labor market narrative. The moment the data dropped, it sent September rate cut probability to the moon. That same day, the CME FedWatch tool showed the chance of the Fed holding rates steady was just 0.6%, while a 25 basis point cut was priced at 99.4%, almost 100% bet. There was even a 27% bet on a 50 basis point cut. The market reacted like a cat stepped on its tail, screaming and sprinting into gold because everyone knows when collapsing employment meets sticky inflation. The Fed is stuck. Cut rates, and inflation might flare back up. Don't cut, and a hard landing could hit instantly. So global capital voted in the most primitive way snatch